Star SCI Managed Fund is designed to grow capital for clients over time without taking excessive risk. In the last year, the fund returned approximately 9% over 12 months and 1% over the last quarter. Out of the three components that represent the growth areas of the fund, domestic equities slightly underperformed its benchmark, the cap SWIX, by just over 1%, whereas the offshore component of the fund returned 19% against its benchmark of 15%, and the fixed income component, or bonds, did approximately 8.5% against its benchmark of 6.9%. So overall, 2 out of 3 areas of the fund did particularly well, with the third area just keeping up with the market. From an asset allocation perspective for the year, we positioned the fund very well. Underweight our benchmark and peers on the domestic equity front, overweight fixed income that had a very, very good year, and overweight offshore exposure, which also did really well relative to the JSE. From a stock-specific perspective, the first 9 months of 2019 was particularly good for the fund. Although resources were up almost 13% for that period, and the rest of the market only 5%, we managed to keep up with the market, even though we are quality at a reasonable price manager with a very low or even 0% weighting to resources. For the last quarter of the year, however, resources doubled their performance of the first 9 months, whereas the balance of the market returned only 1%. So from a peer group perspective and against our benchmark, we found the last quarter of the year a particularly difficult one, as resources doubled their returns of the balance of the year. That said, we continue to be outstanding stock pickers throughout the year. If you take the top 10 best performing stocks on the JSE in 2019, the first 8 of them happened to be resource shares. The 9th one was Quilter, which was a very large exposure inside our portfolio and clearly not a resource or commodity company. If we take the next 20 best performing shares on the JSE, we happen to have 11 of them within our portfolio, none of them being commodities. What's important is to look at how the fund is positioned currently for the next 12 months. Firstly, we're approximately 44% exposed to domestic equities, of which half of those earn a foreign income. Domestic equity exposure is underweight our benchmark, as well as our peer group by a few percentage points. We come up with this weighting based on 2 specific criteria. Firstly, the quantitative analysis we do in terms of what we think the market's going to deliver over the next 12 months, and we're getting returns mid-teen levels at approximately 15%. Then secondly, the intrinsic upside on our own proprietary buy list of stocks, which at this point are giving us returns around 17 or 18%. This is a great margin of safety and certainly great returns, potential returns for our clients. However, we tend to go overweight equities when that number exceeds 20%. The fund is currently overweight fixed income at about 20%, higher than both the peer group and the benchmark. We base this on high real returns that we think are currently available both in the short end of the bond market all the way through to the long end. We feel very positive that another good year of bond returns will follow after a great 2019. Final component of the fund is offshore, foreign component of the fund, and we're at about 17-18% currently. This is in line with the peer group and the benchmark, and we've been reducing our offshore exposure, particularly to equities in the fund, for about a year. And this is most notable because the upside to intrinsic value on our buy list has been diminishing and is currently in single-digit numbers. So to summarize all of that, why own this fund? Well, firstly, we have 40 domestic positions with a margin of safety of 17 to 18%. We believe those companies are undervalued in an already relatively undervalued market. Secondly, we've got high exposure to the fixed income environment where real yields are really high. And then lastly, a significant component of the fund sits in global franchises which are rock solid and add a huge degree of stability for the fund during periods where markets waver. We think clients have a unique opportunity to own a well-diversified portfolio with large optionality on the upside, but a huge degree of stability at the same time.